One of the most common questions I get asked is, how do I start day trading? So what me and my mentor Bao did for our viewers on YouTube is create a free mentorship course that reveals our 12 secrets that every single brand new day trader should know before they get started. But please take note that there is limited seating every single week. So please reserve your spot at myinvestingclub.co. The link is in the description. All right, enjoy the video.
What's going on, guys? Had an interesting idea for a video of something I kind of wanted to talk about. I have a lot of people lately messaging me about stopping out too soon, oversizing, taking stupid losses. And I kind of want to address how I've managed the past month or so to avoid it. I was just looking at my numbers. I've been keeping my average green days, the days I win between, again, it's been growing, $500 to $1,500 a day, consistently, right? It's some bigger, some smaller kind of thing, but my last red day was $200, right? I haven't had a big red day in a while, and I kind of want to explain why that is. So first things first, every single day, guys, you need to be taking the time to draw your lines. You have to. If you're not drawing your lines, then you are just at an extreme disadvantage, right? So let's look, for example, let's talk about this stock right here. Sorry, I'm gonna go back. Okay. In the morning, Alex had mentioned he was looking at a bounce to 420, which was, if you look back, there's just this kind of support area in here, and then 450, which is that whole $half number, right? Okay, if you stuck to that, right? If you just stuck to that, not only would have had a big winner, it would have been stress-free, right? So the premise of this video is I wanted to talk about being fluid. I want to talk about something Harry actually said the other day. When you're trading, you have to be kind of like water, right? You have to be fluid in the stock. And what I mean by that is you have to trade with the stock and size with the move. And then when the momentum from the move is in your direction, that's when you pile on. That's when you get in, right? So for example, on this stock right here, basically, you need to look at the levels you're interested in, right? And devise a plan with your 30% on how to attack. And then from there, you will find and figure out a way to add more size. So looking at this play in the morning, okay. If you know that these are your 3 levels of attack, right? And all you did was set fantasy orders, you would have a 420, 25, somewhere in here, average, right? Now, I always say with 30%, I always think 30 cents is a really fine risk. It's fine, right? I think that's enough. Because I think that's the kind of level that I've gotten comfortable with, letting the stock move against me or whatever, with 30%. So what I did what you could do on this one, is, you have small, 30%, 5%, you could do 5%, 10%, 15% to scale in, hoping that all of your bullets hit. And if they don't, you can size them from there, right? Because again, the point of this is what I'm trying to explain is you want to trade basically with the best way. It's hard to even explain, actually. It's funny, but it's the conversation I had with the trader was you want to trade with the current, right? So if the current's going against you, you want to stay as small as possible. You want to stay as small as possible with the best average as possible, staying in that 30% because it's going against you, right? What happens if a current goes too hard against you? You get crushed, you drown. So with stocks like this, and any stock in particular, you just want to be fluid. You want to be comfortable shorting every pop, right? You want to be comfortable shorting into your lines when it's going against you because you're moving with it. You don't care. You don't care if it bounces here. The problem is people short too much here, don't leave enough for here, and then they panic and they stop out when it gets up to here. You need to be waiting for your levels. You need to wait for your levels, size with the trade as it goes against you, right? That's why we have the 30% rule. You size into it, right? You have your small orders. You let the fantasy orders do the work. And then look what happens. When the tide turns to your favor, it's go time, right? Look at this, all this backside. When you have all the weight of this water, this pressure, and all this front side move turning into a backside move, what happens? Stock craters, right? Stock just goes. Came all the way down here. So a lot of people, they're oversizing too early. And I've been there, right? I've oversized too early. You blow your load and then boom, you're stopped out here. Because like pretend this move was at the open, right? So many people will oversize here, these two lines, and boom, they stop out into this candle, right? Boom, they do it again. And that's what I'm seeing from a lot of guys, is this need to oversize the first move, right? This is where like people need to learn the art of trading. There is so much to it. I've learned over time that it's so non-important to get in first, right? Usually you don't want to be the guy getting in first. Usually the guy getting in first is the guy getting burnt, right? He's too overeager, he's too emotional, right? At the open especially, you're too emotional, you short every pop. This is a good example too. I saw someone send me a chart of this one. They shorted full, this 390 line. Why are you shorting 390 knowing that this was your line at the open? And look where it went to. Every time, right? How many times do you guys stop out just to see the stock went to exactly where you thought it would have, but you sized too early because you were nervous about missing the move, right? You need to be fluid. You need to trade with the stock. If it's popping, right, you stay small, you use your fantasy orders, you wait for your levels. When it's going in your favor, when the tides change, boom, look at it, just fades like nothing, right? Like nothing. It becomes so much easier. Everything becomes easier when you stay small. There is no rush at all to trading. And that's where I'm seeing a lot of people struggle. If you look at FANG, for example.
Hey guys, my name is Tosh Bradley. I'm one of the head mentors and moderators at My Investing Club. If you have any questions about getting started in trading, getting started in MIC in general, text me at 213-458-5997. This is not a robot. It is me directly on the other end of my business line, and we'll get you in the club. We also have special promotions going on that I can get to you depending on your trading needs. Hit me up. Back to the video.
Okay. So, on this stock in particular, for me, what I did was I saw a 250 line, right? I saw this kind of 238 line as well, which was support, okay? Let me pull up my trades on it. Okay, so what I mean by this, when you have a stock, so at the open, all I did was I just shorted a pop into this line. This was all fantasy orders, guys. There was no slamming bids, because you know what? If I was new, I would have been hitting it right here against VWAP, and all I did was set fantasy orders for my lines, and boom, just simple, easy, 20 cents. Now, this is what I want to talk about. Everyone always sends me their losses because they were in VWAP they've scaled into VWAP too early, right? And even when you're scaling into VWAP, you guys have to remember, it's just shorting into the same lines that have already been there, right? If you just draw your lines, keep it simple, right? And you short there, maybe with a little bit bigger size because the stock's broken, look what happens, right? I just covered here because it was zombie times, right? Zombie times was right here. And I knew I had to go, and look, it did really what I wanted it to, right? Almost got down to that line. But all I did was short into my lines, a little bit bigger size, right? I saved the most size for the outer line of a broken move, and boom, I just got that push, and I got to kind of cover into this dip, and with some pretty decent size, and I would have gotten a better move. Like I said, I just kind of responsibly covered out because of zombie times. But I wasn't scared ever. I wasn't panicked ever. I was never nervous about shorting bigger size because I felt it was broken, and I'm shorting into my levels, right? Everyone's always asking me, like, how do you short bigger size in the backside? Like, when do you know to use full size? When you think the stock is broken, you are allowed to use bigger size in the bounces. You're doing the same kind of trading as it is the front side, just bigger size. You're shorting at your levels. The truth is it's getting on full size. The only time I ever get on my full size is usually when I'm slamming the bid, right? So for example here, I hit my lines here, right? It wasn't in full size, still had some left. This is the bullet that I got in full size. I noticed it was breaking down VWAP, it looked weak, I slammed my full size, which sucked my average up, and then boom, took that 10 cents right there, right, from full size, which was nice. People just, they want to rush that concept of full size, and again, I don't know how many times we can say it, it's so irrelevant, like it doesn't matter. The point of trading is, again, to trade fluid, to kind of move with the stock, and then when the tides are in your favor, that is when you're allowed to use full size. That is when you can hammer your full size and get a nice full size win. But until then, you need to stay fluid. You draw your lines, you short your lines, or whatever. You short, you cover, you don't get greedy, and you just trade with the stock, right? When you're trading something like this, you know the stops. You know where you don't want it to stop out, right? So you have to size according to that. To me, if this thing kind of reclaimed like 250, that was the stop. So I'm just sizing accordingly. I'm just saying, okay, I'm just sizing each pop, saying I want to be comfortable at the size I'm at, that if it reclaims, I can stop out and not take a big loss. But then when it confirmed this line, all I did was slam. I got in full size. Boom. Easy. No stress. So I think a lot of people would benefit from thinking about trading that way, right? If you just kind of take a step back and think of trading more like, I don't know how to say this without sounding weird, like kind of like a dance. Like you're moving with the partner, which is the stock, and you're just waiting. That's it. Everybody's in such a rush. Like I don't know, it's a weird conversation because I have so many trader calls on this, but that's how I think of it. It's like everyone's in such a rush to get in, trade, be full size, and boom. When in reality, that's just not how it works, right? Like you need to be comfortable shorting your lines, even if the stock's going against you a little bit. You have your set risk, you know it, and you kind of trade with that, right? Like again, to me, trading has become more of, I like to rely on my fantasy orders until the tide's in my turn, in my favor. When the tide goes in my favor, like here, all I did was short my lines. I hit this line, it tanked, I put orders back, filled, right? Put orders up here, filled, and then all I did was just wait until the tide kind of went in my favor. When it went in my favor, that's when I sized. Almost the point of trading is just to make it to the point where you can use size, right? Stay small, trade small, use fantasy orders, and then take the reins when it's time to size in. That's what I've been doing, and that's been a huge help. So let me know how that works for you.
Thank you so much for watching our video. If you want to see more of our videos, please subscribe to our YouTube channel by clicking the button here. We do our best to post a new video every single day. If you have any questions about MIC or any general trading questions, please text Tosh using the number here. Also, stay up to date by watching some of our most recent videos right over here.